Greetings, Dwayne. Let's take a look at the Dow for Friday, the 6th day of November, 2015. Now, for those of you who have subscribed to One Trade a Day, and the Dow is one of the markets that you have chosen, the website you'll come to is eminifuturestrading.com. You'll click Dow. You'll enter a username, and if the Dow is one of the markets you subscribe to, you've been given the password. You'll enter the password, log in, and there is your trade for Friday, published at 10:30 a.m. Eastern. Consider being long above 17,770 or short below 17,690. All right, let's take a look at the trade. As you can see right from the start, things look pretty good. Long above 17,770. We put our trigger line at 71. Why? Because if we want to be long above 770, 771 is the first spot where you can be long above 770. Now, we have this crazy little thing called an 8-tick hard stop that we use. We have advanced partners who use larger stop losses in search of bigger game, etc. So I just want to point out that once we trigger, price pulls back to, here's a swing low, 64. 17,764. If you take 64, you add 8 points to that. 64 plus 8 equals 71. 71 minus 8 equals 64. What does all that mean? Well, it means that the very first move coming out of the box got stopped out. Now, 4 ticks, if you're trading the 2420 blueprint, we do take our stop to break even. However, 71 plus 4 would be 75. The swing high here is 74, 74, 74. Okay? All right. Important prices, important areas are almost always tested. You've heard me say that. Well, it depends on how long you've been a part of our community. If you've been a part of the community for any length of time, you've heard it more times than you can remember. On this trigger, the second trigger, after the initial stop out, price runs up to a swing high of 17,782. 17,782. Could get another 7. There we go. 17,782. That's the swing high. All right. So from 71 to 82, that is 11 ticks. Points. 11 points. Now, the Dow pays $5 per point. If you're trading the 2420 blueprint and your goal is $100 per contract per day, because you are pursuing the goal of becoming a 20 contract trader over a period of 24 months, this is the method that we use to teach you how to do it. $100 per contract per day. Once your account balance has increased by $2,000, you get a green light to add a second contract. Then we go on a calendar-based schedule, and at the appointed time, you'll add a third and a fourth and a fifth. If at any time you lose your mojo and you're no longer profitable, we've got to go back in Sim, troubleshoot, see what's going on, because our methodology, our definable edge is very simple. If something's not meshing, 9 times out of 10, it has something to do with what we as a trader are doing, thinking, not doing. We had to be consecutively profitable 10 days in a row to even go live. And then we increased to 2 contracts, to 3, to 4. If all of a sudden we hit 5, could be a psychological block because of the amount of money involved. Okay, we'll work on that. Whatever it is, we'll troubleshoot it. We're not going to leave you to bleed out on the trading floor. We're going to pull you back to safety, get you squared away, and then you'll step right back out where you left off. Okay. Dow pays $5 per point, 20 points equals your $100 per contract per day. Okay? All right. Now, we brought our stop to break even at 4 ticks. That's 17,771. You'll notice this candle here trades all the way back to 17,771. If all you do is bring your stop to break even, guess what? Just got stopped out at break even. Now, we're not going to do that though. We need 20 points to be done for the day. At 11 points, that's more than 50% of our daily goal in one trade. We're not going to let that get away. A couple ways you can do this. At 8 points, I'm going to suggest you have 5 locked in. At 9, you'll have 6. 10, you'll have 7. At 11, you'll have 8 locked in. When price comes back, price pulls back, you get stopped out $7 or $8, depends upon how aggressive you're willing to be. Okay? Remember, you have 10 trades to get the job done. Market made 11 available. Could you have just taken 11? Sure. But at 11, you think it's going to go to 12, and 13, and 14, and 15. You think it's going to do this, right? Okay. But in case it doesn't, we're going to make sure we don't walk away from this trade empty-handed. Okay. Now, price comes back to touch 71, and look at this move. This thing goes from 71 all the way to 825. That's roughly 50 points. However, we only need 20, but that's 50, and we're not in it. Okay? So what happens next? Price gets back below the trigger, resets itself, off it goes again. This time it makes it all the way up to 89. From 71 to 89, that's 8 18 points. Okay? 18. How many are you going to lock in out of 18? I'd like to think you're going to lock in 14 or 15. Maybe you only lock in 13 or 14. Okay. Price gets back below. Triggers again. Swing high. 783. 71 to 83. 71 to 83. It's 12. Price gets back below. From 71 to 76 is 5. At 4, our stop goes to break even. And so that's what this becomes, is simply a break-even trade. Okay. Next, price gets below 71, resets, triggers, off we go. From 71 to 91, that's exactly 20 points. With this red slope, do you see how I've got no no desire to get long this trade? None. I want to wait until I've got the wind at my back. Now, sometimes we'll have the wind at our back, but the trade just runs out of energy. Watch. Leg, retrace, leg, deeper retracement, leg, retrace, leg. Okay. Now, we have no control. You have no control. No one can control what the market's going to do. We simply know that important prices, important areas are almost always tested. And so we trigger back in here. Price goes from 71 to 75. That's 4 ticks. It's a break-even trade. Here, price comes up. Price has already gotten below the CFMA 1. Okay. Cycle has already turned red. This is not a long trade that I'm really interested in taking. Blue, blue. That's for me. So we trigger at 71, we put in a swing high up at 82. 71 to 82. That's 11. It's 11 ticks. So the market moved 11 ticks. What are you going to take out of it? 7? 8? It's up to you how much you lock in on any given trade. Now, it's 11:48. The trade was published at 10:30. Look at how many opportunities the market has given us already. Now, this trade here, this is red and falling. I'm not real crazy about taking the trade. Does it run the distance? Yeah, it actually gives up 19 points. Remember, we only need 20 to be done for the day. So for those of you that don't have the indicator set, chances are you took this trade. For those that do have the indicator set, probably what you did is what I've taught you, and you waited until this candle, you possibly entered here. You maybe ended up with a break-even trade on your hands. Okay. Again, just fighting the flow. Fighting. When we trigger, well, this trigger here, you're still fighting. Now, let's draw a line on the hard stop. If you're in a trade, now this, if you took this trade, this ran up to 80. That's 9 ticks. You're not going to take a loss on that trade. Whether you have the indicator set or not, you're not going to take a loss, okay? Because at 4 ticks, you're going to move your stop to break even. You have 9 ticks in the trade, hopefully you're going to lock something substantial in. That's what I hope you're going to do, okay? We start triggering over here, get some back and forth, off we go. What's the swing high here? 90. From 71 to 90. 71 to 90. It's 19 points. If 20 is your hard target, guess what? You didn't hit it. Are you going to let it come all the way back and stop you out with nothing? Of course not. At 19, you're going to lock in 10, 13, 15. At 19, I wouldn't be ashamed to lock in 17. It's now 12:30. Very active for the Dow today on this particular trade. Okay, on this move here, we get up to 77. So that's a 6-tick move. Worst case is you move your stop to break even or break even plus 1. At 5 ticks, if you move to break even plus 1, you cover the commissions. Covering the commissions is a beautiful thing, right? Don't you agree? You have no risk on the trade. You cover the commission. Life's good. All right. Now, we break again. Now, those of you with the indicator set who work with me, do some private mentoring, you probably know you're going to get long here. But those without the indicator set may get long here. Whether they get long here or long here, it's really doesn't matter because this thing goes 71, 81, 91. Does it go 29 points? Remember, we only need 20. And that might be it for the day. It might just take off and fly away. Comes back, no trigger. Okay. All right. That's the end of the day on Friday. Now, let's go back. Let's just back it up. Beep. Beep. If the first trade had not gotten stopped out to the tick, you think you're the only person in the world. Man, I always get stopped out to the tick. Well, you're not the only one. It happens. It's nothing personal. The market's not out to get you. I mean, if you have a look here, look at how far the market had traveled. Leg and a retrace, leg and a retrace, leg and a retrace, big leg. It's no surprise that you get a deeper retracement there. Okay? Leg, retrace. Just so happens if you take your stop break, it just comes right back. So that's why you want to lock something in. 7, 8. Okay? Now, again, if you're someone who has the indicator set, you've been trading with me, you've been in mentoring sessions, you're probably on this thing here. Boom. Okay? But maybe you're not. Maybe you don't have the indicator set. Maybe you've done no private mentoring with me. So you got to wait for the next trigger. Okay? Market moves 18, lock in what you will. Market moves 12, lock in what you will. Market moves 20. Lock in what you will. Remember, you only need 20. That was a break even. And that's a break even. Market moves 11. Lock in what you will. Market moves 19. Lock in what you will. Market moves 9. Lock in what you will. Market moves 6. Worst case, break even. 6. Worst case, break even. Worst case, break even. Market moves 19. Got to be locking in 13, 14, 15. If you're still trading, if you haven't managed to get your 20 points by now. You did start with an 8-point deficit. Okay. First trade got stopped out to the tick. That's going to happen. If you don't think that's going to happen, you need to Google the truth about trading, because that's going to happen. So then we get a break even, and then we get a nice, clean, beautiful 29 tick run. And that was it for the day. So there you have it. That is the one trade a day recap for the Dow Emini Futures for Friday, the 6th day of November 2015. If you have not yet signed up for the one trade a day, you should do that straight away. Go to cfrn.net/one trade a day. Read everything. Make sure you understand it. Read the truth about trading. I moved that. I had told you I would move it. I did move it. Let me show you where I moved it to. All right, you're going to go read that. And then you're going to come here, place your order. And then you're going to print out your NDA and cancellation policy. Sign it. Notarize it. Send it back. Okay, very important. Here. You go to our Google Plus page. I have a bad mouse. I need a new mouse. The truth about trading. Hint, it's not what you think it is. Click that, and it'll take you right there. Okay? You can shortcut all that. Go to our website, click Emini Radio Blog, click View Recent Posts. There it is. The truth about E-mini trading and the hard stop. Okay? cfrn.net/one-trade-a-day. One trade a day. That's it. All right? I'll see you in the live trading room. Take care. Have a great weekend.